Welcome to Bears in Exile. Today is November 2nd, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Okay, we were looking for a side tick today, possibly, and it did happen. We had the FOMC results, which were completely lackluster. We did not get QE3, and Benny Boy did not have anything really uplifting to tell the markets. As a matter of fact, they cut the GDP outlook for the United States. Not attractive. Regardless, we had the run up during the day on hopes that something would be announced, and when it didn't transpire, it just kind of hung out. So, nice little green bar today. We do have some positive indications, but by the same token, we also have some not so positive indications. Positive indication number one, we were able to get above the midpoint of the previous candle. That is good. We did not close at the highs of the day. That is not good. We resolved the downtick from 2 days ago, and we're expecting some sort of move sideways potentially. So that happened, definitely with a positive bias. We have the middle Bollinger Band crossing into the short-term moving averages, which has not been the case over the past couple of weeks, actually almost for the past month. So seeing that happen is a tell, potentially. We are still below the 200-day moving average, which is bearish. And if we're able to go all the way up and test it, and who knows if we will or not, and it fails, that is extremely bearish. Now, if we're able to close above it, get a follow-up candle that is big and solid and green, that will be very bullish. But for the moment, it doesn't seem like that is the case, at least the odds. We are still below the upper price consensus level. We still need to test the major price consensus level down here at 11,400. And we have the long-term moving averages in a flat line, offering little to stop the move down should it occur. And we also have a slight bounce up on the CCI, staying in positive territory. We have the stochastics moving down. We have the 14-day RSI moving average. Very, very important. We're still looking for that hook. We still do not have it. Uptick on the RSI, downtick on the histogram, downtick on the MACD, looking for the bearish cross. So while there are some bullish indications that maybe something could happen and this will go on its merry way, we certainly also have bearish potentials here. And the short-term moving averages are moving sideways. They're not really pointed up. They're not really pointed down. This is a decision point. So that's good. We want a decision point and not some kind of crazy rebound looking thing happening right here. Now, if we were to get that tomorrow, certainly that would be troublesome. But as it stands right now, this does not look bad for the bears. Going into the 60-minute time frame, we are not looking for divergences. The divergences are trying to work themselves out, which is great. And here we can see over the last couple of days the breakdown of the short-term moving averages got through the bullish bar and have collapsed it. And we're now coming up for a back test of that those long-term moving averages, which is completely natural, which is completely typical. I mean, the last thing that we want is for this to break down and just keep going, and it becomes irregular and bubbly and wobbly and terrible. That is unnatural. So going back for a retest of those long-term moving averages, so long as we get a failure here, that is fantastic. Absolutely. Now, certainly in the 60-minute time frame, this is trying to work itself off. You have uptick on the CCI getting to overbought. You have the stochastics getting pretty high. The 14-day RSI moving average very low. Uptick on the RSI still in negative territory. Uptick on the MACD histogram getting into positive territory, and a bullish cross on the MACD. So there is stuff to work out in the 60-minute time period. Absolutely. This is not a rocket to the bottom. So, but after these have reset, the daily will be in a really good position for further movement down, especially if we get the hook of the 14-day RSI moving average. Oh yeah. SPX, also some conflicting signs. We're below the 200-day moving average, bearish. We have a nice big green candle getting above the 50% mark of the previous candle. That is bullish. We do have a little stub at the top, which is not a great sign. We have the middle Bollinger Band crossing over the short-term moving averages. If it gets to the top, that will be bad for bulls. TCI right at neutral. Stochastics on their way down. Still looking for the hook on the 14-day RSI moving average. Uptick on the RSI. Downtick on the histogram, almost to negative. And looking for the bearish cross of the MACD. Should also be bearish. Not too shabby. All it needs is a little push. Little push. If it gets that, we have the major price consensus level ready to fall on one pretty bad day. So, and when that occurs, we will have our run at the previous low. Whether or not it can get there, whether or not it can break it, that remains to be seen. We'll have to see what our indicators say at the time. But we need that hook of the 14-day RSI moving average. So important. The VIX. Okay, even with 178 points to the upside on the Dow, the VIX is above 30. Psychologically important number. Ended with a little miniaturized inverse hammer, which is following a spinning top, and we are in between the major price consensus level and the upper price consensus level. So going down off of a spinning top into an inverse hammer, could that mean that the move down on this is done and it needs to go up? Possibly. Is this a carryover of the move up and it needs to go down? That's possible too. So what does everything else say? Well, we have the cross of the middle Bollinger Band line getting below, almost below the short-term moving averages, which are pointing up, which are going to come into contact with a flatline long-term moving average, which should provide little to no resistance for it to break through. And if the middle Bollinger Band ends up below the short-term moving averages, that is bullish. There is a tell. Downtick on the CCI, getting out of overbought territory. Stochastics heading up, really flattening out on the 14-day RSI moving average. We need that hook to the positive. Slight downtick in the RSI, still in positive territory. Uptick on the MACD histogram, finally getting into positive territory. Bullish cross on the MACD. This is not looking bad. Not looking bad. TNA 45.59. How about that? But look at this. It is going into what looks like a double flat line. Very bad. We do not like double flat lines. Middle Bollinger Band right in the middle of everything. That is ugly. Uptick on the CCI. Stochastics heading down. 14-day RSI moving average getting right to overbought and leveling out. Looking for the hook. Uptick on the RSI, still in positive territory. Downtick on the histogram, downtick on the MACD, looking for the bearish cross. If this turns into a true double flatline on TNA, that is not a good sign. Oh no. And here just yesterday I was saying that if we were to have some massive rally, TNA was the way to go. That was in the daily running thread, and I still believe that to some extent. But if this turns into a double flatline, oh boy, that means it's going to have a rapid move either up or down. So until it decides its direction, if this were to occur, I will definitely be waiting until it makes its move. Making a bet on a double flatline is very dangerous. So, and it ended with a hammer, a little miniaturized hammer. Does that signify that this is the bottom of this move, or does this signify that it is the top portion of this move? That is for you to decide. Very not a telling place for that to occur. Inverse hammer yesterday and a hammer today, kind of a little yin-yang, and also potentially indicative of super indecision, which is a double flatline. A couple more days of sideways movement and we will have it. All right, it's time for the star of the show, UUP. This is very interesting. Look at this. We gapped down to the 200-day moving average and backed away from it. Ooh. If the bulls were truly in control of this market, it should have gapped down to the 200-day moving average and fallen below it, closing below it, and that is not the case. Yes, we are below the major price consensus level that needs to be retested. It needs to be broken. That's not occurred yesterday when we got our hammer. We closed just below it. So looking for that. But check this out. Middle Bollinger Band getting below the short-term moving averages. Not partially below, not halfway below. It is below. That is a really good sign for dollar bulls. CCI ticking down, backing away from overbought. Stochastics, yes, they are getting high, especially the fast stochastic. 14-day RSI moving average still pointing down, looking for that hook. Slight downtick on the RSI, getting to perfectly neutral. Uptick on the MACD and the MACD histogram, looking for the bullish cross. Ooh. FXE, the euro. How about this? Gapped up and was down, closing below the major price consensus level, getting further away from the 200-day moving average. The short-term moving averages once again piercing the long-term moving averages and collapsing them. Early stages of that, but they are really taking some damage. Uptick on the CCI, 14-day RSI moving average, very high, looking for that hook. Stochastics clicking down, slight tick up on the RSI, almost have the bearish cross on the MACD, down tick on the MACD histogram, getting to 0. So we've been commenting in the daily running thread that we believe that the euro, the fair median for the euro is 1.35. We did hit 1.361, which is very close to that target, but we do believe that it will hit that target and it will have overshoot. Now, to what degree will the overshoot occur? Will it go down to 1.32? Will it go down to 1.33? We don't know, but nonetheless, we still believe that that's going to happen. Closing below the lower price consensus level would indicate that a test of the lower price consensus level is entirely possible, and that would produce our 1.35 target. Now the overshoot, should it get it, and I think that it's entirely possible that it will, would mean breaking the lower price consensus level, the previous month's lower price consensus level, which is very close to it, and then the threat of testing the previous recent low would produce our overshoot. Now, it's not to say that we are going to break the previous low. It is possible, but we're going to have to wait and see about that. But if we were to get our overshoot, that is fantastic. Notice the middle Bollinger Band above the short-term moving averages should give it some weight to go down, and everything else nice, nice inverse of UUP. I am liking this. And GLD, our second VIX. Ooh, markets were up. Gold was up. Not huge, but certainly up. Look at the short-term moving averages. This is very, very important. Yes, we ended with a spinning top, but look at this. Standard guppy entry. We came down, we broke through the bar, we collapsed it. It hung around, it came back up, it busted through it. It came back for a test and bounced off of it. That is fabulous. And with the dollar going up, going down, going all around, this is an indication of fear. So very interesting that on the day of the Fed speaking, which is normally just bullish and puts people's minds at ease, gold is up, our second VIX. CCI ticking up, getting to overbought. Stochastics very high. Very important, 14-day RSI moving average still ticking up, still has plenty of room to move. While we do see the stochastics reset themselves occasionally, we see them get stuck while the 14-day RSI moving average is marching up. We do want to see this get all the way to the top. If we were to see that and the market to decline sufficiently, we may have a retest of the previous high. That is far away from here, but it is possible. We are above the major price consensus level for this new month. We are above the upper price consensus level for this current month. We have the major price consensus level for the previous month up here near 176, and if that is busted, it would be natural to see a test of the upper price consensus level, which coincides with the previous highs we had. Very important. RSI ticking up, MACD barely ticking down. That is the histogram, MACD histogram. MACD itself still heading up, lots of room to move. And last but not least, SLV, poor man's silver. Poor man's silver. Poor man's gold. Ha ha ha. Spinning top, just like gold. You can see that the short-term moving averages ever so slightly are pointed up. We have the middle Bollinger Band below them. Uptick on the CCI, uptick on the slow stochastic, downtick on the fast stochastic, 14-day RSI moving average marching up. We want to see a hook of the fast stochastic very soon. Uptick on the RSI, ever so slightly downtick on the MACD histogram, and uptick on the MACD. Not too shabby. It is doing battle with the long-term moving averages, and if it's able to stay there, get a little bit higher, whittle them away, we should see a test of the 200-day moving average. And that's it for tonight. FOMC meeting, not saying good things. GDP for the United States cut for the coming year, and we are also waiting on the vote of confidence in Greece, which comes Friday. Very, very exciting one way or the other. So we need to see more, but if we have a breakdown tomorrow, especially if we're able to get below the flatline bar on the Dow, on the SPX, if we're able to bust the major price consensus level, we are really going to have a tell. So there you have it. I, at this moment, do think that the Bears have a slight advantage, and what a turn of events. The Bulls were unstoppable. Had they have gotten a huge positive bar above the 200-day moving average, they just could not do it. Now they have to fight their way above it once again, and the danger of a failure is going to look massively bearish. So as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.